All right, let's jump right into Snap's first quarter 2025 earnings report. Seems like the market didn't take it too well.
No, definitely not. A pretty strong negative reaction right out of the gate.
We saw revenue actually nudge past expectations, right? $1.363 billion.
Yeah, just beat the $1.35 billion estimate. So on the surface, top line looked okay.
But then the earnings per share, that was the sticking point, a loss instead of a profit.
Exactly. Reported a loss of 8 cents per share when analysts were banking on a 4-cent profit. That's a significant miss.
Oof. And then piling on top of that, they didn't offer any future financial guidance.
And that combination, the earnings miss plus no forecast, clearly rattled investors, hence the big share price drop over 15%.
Makes sense. Okay, but before everyone hits the panic button, it wasn't all doom and gloom compared to, say, last year.
No, that's a crucial point. You have to look at the year-over-year picture. Revenue was actually up 14% compared to Q1 2024.
So solid growth there. And what about the loss itself? Was that better or worse than last year?
Much better, actually. The net loss narrowed considerably. It was $140 million this quarter, or that 8 cents per share.
Compared to
about $305 million, or 19 cents per share, in the same quarter last year. So, a big improvement on the bottom line, relatively speaking.
Okay, that's a significant reduction in losses. Anything else on the financial front showing improvement?
Yeah, the adjusted EBITDA margin. It doubled.
What?
Reached 8% this quarter. That doubling definitely points towards better operational efficiency.
Got it. So financials are a mixed picture, improving year over year, but missing current expectations and lacking forward visibility.
Precisely. Now, shifting gears a bit, the operational side had some interesting highlights too.
Like user growth, how did that look?
Still growing. Daily active users, the DAUs, hit 460 million.
And how's that growth compare?
It's up 9% year over year and also up 9% from the previous quarter. So sequential growth too.
And this isn't just a one-off spike, is it?
No, they emphasize this is part of a 5-year consistent growth trend for DAUs. Shows stickiness.
Okay, consistent DAU growth. What about the bigger number, monthly active users?
They crossed a milestone there, sort of, surpassed 900 million MAUs.
So they're inching closer to that 1 billion user target they've talked about.
Exactly. It puts that goal within reach, which is, a big number for any platform.
And how's the advertising side holding up? Are businesses still spending on Snaps?
Seems like it. The number of active advertisers on the platform jumped significantly.
How significant?
Up 60% compared to Q1 last year. 60%.
Wow, okay. That must translate to ad revenue growth.
It did. Ad revenues were up 9% year over year, totaling $1.21 billion. So advertisers are definitely still active in spending.
And what about Snapchat Plus, their subscription service? How's that performing?
Still getting steam. It reached 15 million subscribers this quarter.
Up from
14 million last quarter. And year over year, that's a 59% increase in subscribers. Pretty impressive growth.
And that feeds into their other revenue line.
Correct. That segment, which is mostly Snapchat plus SAP, saw a huge 75% year-over-year jump, hitting $152 million.
So users are willing to pay for extra features? That's a positive signal.
It definitely suggests a strong core user base who see value in the premium offering.
Did they mention anything about actual engagement? Like, are people spending more time on the app?
It did. Global time spent watching content increased year over year.
And they attributed that to?
Improvements in their AI and machine learning models. Better content ranking, more personalization, keeping users engaged longer.
Makes sense. Any specific examples of that engagement?
Yeah, they highlighted Spotlight, their short-form video feature. Views on Spotlight videos less than 24 hours old actually doubled compared to last year.
Doubled. That suggests the algorithm improvements are working, at least for surfacing fresh content.
Seems that way. It shows they're getting better at delivering relevant, timely content quickly.
Okay, so lots of positive operational metrics. User growth, advertiser growth, subscription growth, engagement up. Which brings us back to that market reaction. Why the disconnect?
Well, it really circles back to that lack of future guidance. That was a major red flag for investors.
And the reason they gave was basically economic uncertainty.
Pretty much. They pointed to the uncertain macroeconomic conditions, making it too difficult to forecast accurately.
Any specific concerns they mentioned?
Yeah, they flagged potential changes to the de minimis exemption rule that affects, low-value imports, often from e-commerce advertisers.
Ah, okay. And anything else?
And also the uncertainty around potential tariff changes, specifically specifically mentioning President Trump's shifting plans. Stuff like that makes advertisers hesitant.
Right, because if advertisers don't know what their costs or the economic climate will look like, they might pull back on spending.
Exactly. There's this broader fear that if the economy weakens, ad budgets are often one of the first things to get cut. So no guidance in that environment just amplifies the concern.
It signals a lack of confidence, or at least a lack of visibility, from the company itself.
Precisely. Investors hate uncertainty, and Snap basically said things are uncertain.
Okay, another interesting wrinkle I saw was where the user growth is coming from geographically.
Yes, that's a really important dynamic to understand. The growth is primarily coming from the rest of world segment.
Not North America or Europe.
Actually, the report indicated they lost users in the U.S. during this period.
Lost users in the U.S., that seems problematic. Why?
Because the vast majority of Snap's revenue comes from the U.S. and Europe. The average revenue per user, or ARPU, is way higher in those regions.
So they're gaining users where they make less money per user and losing them or stagnating where they make the most money.
That's the concern, yes. It raises questions about whether they're hitting saturation in those really key high-value markets.
Which means they need to focus less on just getting more users overall and more on making more money from the users they already have in the US and Europe.
Exactly. Monetization in those core markets becomes even more critical if user growth there is slowing or reversing. It's a strategic challenge.
Makes sense. So how is Wall Street digesting all of this now? What's the general feeling among analysts?
Well, before this report, the consensus rating was generally a hold.
A hold, okay. And the price target?
The average target was around $11.28 per share, which, after the drop, implies some potential upside.
Wait, those estimates are likely to change now, right?
Oh, absolutely. Analysts will be revising their models and targets based on this new information and the lack of guidance. Expect changes there.
And historically, Snap stock is known for being pretty volatile around earnings anyway.
Very volatile. Big swings are common. And overall, over the last few years, it really hasn't kept pace with the broader market, like the S&P 500. It's underperformed.
Despite that volatility and the recent drop, is there any argument that it might be, undervalued now?
Some analysis suggests that, yeah, if you look at its price-to-sales ratio compared to its own historical average, like the last 3 years, it might look relatively cheap. But valuation is always tricky with volatile growth stocks.
True. And did Snap's news have any ripple effects on other social media stocks?
It seemed to. We saw shares of Pinterest, Reddit, even Meta take a bit of a hit afterwards. Suggests maybe some sector-wide jitters about ad spending, or maybe just investor sentiment cooling a bit.
Interesting. So summing it all up, it really is a tale of two stories, isn't it?
It really is. On one side, you've got positive user growth, MAUs nearing 1 billion, strong advertiser additions, Snapchat Plus doing well, revenue increasing year over year.
But on the other side, you have the earnings miss, the lack of guidance, concerns about monetization in key markets, and this backdrop of economic uncertainty weighing heavily.
Exactly. You've got these strong engagement and growth signals kind of clashing with profitability concerns and market skepticism about the future, at least the near-term future.
So it presents a complex picture for Snap going forward.
Definitely. It's a challenging balancing act. They need to prove they can really effectively monetize that huge user base, especially in the high ARPU regions, while also navigating what could be tricky economic waters ahead.
Lots to watch then. Their monetization strategies and how they handle the economy will be key.
Absolutely critical for their path forward.
Well, this has been really insightful. If you enjoyed this breakdown and want more analysis like this, please do hit that like button and subscribe to the channel. It genuinely helps us continue these conversations.
Yeah, we appreciate the support.
Thanks again for tuning in.
Thank you.